Good afternoon. This will probably be the only English presentation today. So I hope you're excited as much as we are from Paxos. So we're going to talk a little bit about what we call from a wallet to the world, and give all of you a little bit of context into who Paxos is, what we're doing, but most importantly, how we're viewing crypto and blockchain technology in the future. My name is Arnold J Reyes. I'm head of business development for Latin America at Paxos. And for those of you that don't know Paxos, we've been around for about 11 years. We're a regulated blockchain infrastructure company based in the United States with global operations. And Paxos was formed over a decade ago, not necessarily to buy and sell cryptocurrencies, but essentially we wanted to redefine financial infrastructure and re-platform the financial system using a novel and breakthrough technology called blockchain. And what we ended up thinking about from a company point of view was our goal is to take any kind of asset, whether that's fiat currencies, real estate, stable coins, whatever you want to call them, take those assets, tokenize them, and make them available to anyone around the world easily, instantaneously, and securely. And that's really what we ultimately do at Paxos. And why are we doing this? What's wrong with the financial system? Well, we identified a couple things that were massively wrong that really impact global financial systems everywhere in the world, particularly in emerging markets. One, there's a lot of underutilized assets. So when you think about real estate, when you think about precious metals, when you think about fiat currencies, a lot of those assets today are locked up. They're not being democratized to whoever wants those assets. They're hard to move around. When you think about the securities industry, settlement takes T+2, T+3. So there's trillions of dollars in assets that are locked up and are underutilized. The second piece that we believe is fundamentally inefficient is the financial system today is still very exclusive. It's not open to everyone in the world. And you start to get into things around financial inclusion or financial exclusion. The system is just not built or hasn't been built, and the technology hasn't been leveraged to give broad scale access to people. And the third point is there's still a lot of systemic inefficiencies in the system. As many of you know, we're sending tourists to space. We have basically mapped out the whole human DNA strand, the human genome. But if you want to send a payment from New York City to Sao Paulo today, it takes 2 or 3 days for that cross-border payment to happen. So the systems we have today are still operating in legacy-like behaviors. They're still very inefficient. And when Paxos came to basically think about these fundamental problems, we said blockchain infrastructure, regulated blockchain infrastructure, is without a question one of the ways in which we can address these three topics on a global and certainly on a Latin American and Brazilian scale. And today at Paxos, how are we solving this problem? First and foremost, we have a bunch of different products that are all heavily regulated. In 2015, Paxos made the determination early on that the best way to succeed as an infrastructure company, and frankly as a crypto company, is to be regulated. So we've always approached regulation as a fundamental core of our company. Even the products today that we launch into market has to be approved by our regulators in the US or our regulators in Singapore. Today we offer 3 different product lines or divisions of the company. One is our stablecoin and payments. And for someone like me that has worked at PayPal, Visa, American Express, MasterCard, that part is incredibly exciting because payments today, as much as we think they're very efficient, they're still very inefficient. The second leg of our platform is crypto brokerage. And this is where we allow companies like PicPay, Nubank, Mercado Pago, PayPal, Plink, and many others around the world offer their customers the ability to buy, hold, sell, transfer cryptocurrencies safely and securely and natively through those consumer apps. And the third is settlement. And settlement is a huge opportunity because, as I said, today most of the settlement happening around the world, whether you're talking about commodities, currencies, fixed income equities, settlement processes take an enormous amount of time. T+1, T+2 may not sound a lot, but in a high stakes financial world, it's a tremendous lag time that exists. And we're also privileged that we work with some of the biggest and best names around the world. As I said, PayPal, MasterCard, Mercado Libre, Nubank, PicPay, and on the settlement side, some of the leading commodities houses around the world, such as Coke Industries, StoneX, and so forth. And really what we've encountered as we've continued to grow our infrastructure is how important being regulated truly is. And as we continue to expand our presence in Brazil and the rest of Latin America, a lot of the clients that we work with, whether they're financial institutions or leading fintechs, really appreciate the level of control and compliance that comes along with being a regulated company. And most recently, some of you may have heard, PayPal launched its stablecoin. And Paxos is the issuer of that stablecoin, and we're also the custodian. So we were privileged enough about 3 or 4 weeks ago to announce that partnership with PayPal, where PayPal is the first financial services platform in the world to launch their own native stablecoin, which will be used for a whole set of different things that you can imagine money movement today. So if we take a look into the future, we absolutely have to take a look towards the past and see where all of this came from, right? And obviously there's debate as to whether we're still in a crypto winter, we're in the middle of a crypto winter, we've ended a crypto winter. But I think looking at this many, many years back is important. So in the past, you know, when in 2008 with Satoshi's white paper, when you look at what happened in those early years, it was really about early adopters acquiring tokens, primarily Bitcoin. That was a very speculative game. Bitcoin, if for those of you that remember, a lot of the utility was used in illicit websites or websites that were offering products or services that were illegal. And that created this sort of bad reputation around Bitcoin and cryptocurrency in general. And the utilities were very limited to certain use cases. And what we saw also in the early days is that cryptocurrencies were very much part of this almost libertarian movement where a lot of individuals, vocal individuals, were saying, through cryptocurrency, we're going to, you know, eradicate central banks around the world. No one's going to regulate us. We believe that's actually the wrong approach to drive growth and adoption of cryptocurrency and blockchain technology. In the present, which is where we are today, the interesting thing is now people talk about cryptocurrency as an asset class. And we've seen some Brazilian companies today, broker-dealers or investment management companies, offering cryptocurrencies as part of an asset allocation strategy for investments. So it's matured a bit. Now it's no longer just purely speculative, but now it's maturing a bit as an asset class. We're beginning to see real-world commerce and payments use cases. There's companies now enabling the sending of remittances between the United States and Mexico, or between other markets within Latin America. We're seeing more and more companies now offer merchants the ability to accept cryptocurrency-based payments on their checkout pages. And the third point with where we are today is we're seeing more and more broad-scale mass adoption of cryptocurrencies in general. And it's become not only speculative, but as I said, part of an investment theme that some people are approaching it with. And today's market is still characterized by high degrees of volatility. There's still a lot of regulatory uncertainty. When you take a look at Latin America in general, only one country has made Bitcoin legal currency, which is El Salvador. But all the other countries, if you really take a look at where the regulators are heading, there is still not a very explicit regulation around cryptocurrencies. And what we've seen in Brazil is actually incredibly encouraging, not only in the context of Brazil and Latin America, but on the global stage. Because what we've seen in Brazil today, in the present, is a set of regulators and a central bank and the CVM coming together to actually think of and put in place thoughtful regulation, which instead of squashing the industry is providing a regulatory framework for how to continue innovating and driving adoption in a responsible and safe way, right? So the other point I'll mention of where we are today is the increasing interest in stablecoins, right? More and more people are wanting to have tokenized fiat currencies that they can use for different types of transactions, from B2B payments to salary payouts in high inflation markets, as I said, to cross-border remittances, merchant payments, and so forth. So stablecoins, by far, from a Paxos vantage point, is one of the things that we continue to see growing in demand. In the future, how are we thinking about the industry? Well, undoubtedly, we're going to start seeing more and more institutional adoption of cryptocurrency and blockchain technology. In the United States, some of you may have heard, there's a lot of movement around creating Bitcoin ETFs from some of the most prestigious names on Wall Street, like BlackRock. JP Morgan has its JP Morgan coin to enable intercompany payment settlement. So more and more we'll begin seeing Wall Street firms and global firms really begin adopting and ingesting this technology. The second is we'll actually start seeing what's most important for consumers, which I call the share of life cycle, which is more and more consumers will start moving towards crypto, and by crypto I include stablecoins, for activities that involve saving, spending, investing, and protecting their money, right? Cryptocurrencies will more and more play a role in those four different types of activities. And then we'll continue to see a little bit more formality in how regulators approach the space. And again, we believe that regulation is fundamental to A, drive credibility of the industry and of the technology, and to drive adoption, and to drive a lot of solutions that will solve some of the problems I had identified earlier. So that's a little bit about the past, how Paxos sees it, today how Paxos sees it, and certainly where we're betting on for the future. And crypto in Latin America, without question, has taken off, and Latin Americans have really embraced crypto. And some of these stats are very surprising when you take a look at the global landscape. It's the 7th largest market as a region in the world for crypto. You have 5 Latin American markets in the top 30 for crypto adoption. 51% of consumers in Latin America, based on this survey, have already at least have had one cryptocurrency transaction. 40% growth year on year between 2021 2022 in crypto volumes inbound, crypto coming into Latin America. 10% of the Brazilian and Argentine population holding crypto. The most interesting fact here, and it's one that our clients and our prospects ask us about most, is that 82% of the people surveyed said they would buy cryptocurrency from their trusted financial institution or from their main financial services provider, which is why we've seen enormous growth from our 3 Brazilian customers, PicPay, Nubank, and Mercado Pago. And the reality is, people often ask me, people that are not from Latin America ask me, why is Latin America and why is crypto so popular in Latin America? And being from Central America and having grown up in a bunch of different countries in the region, I know exactly why. It's because Latin America, fortunately or unfortunately, has had a very challenging past. And most of this past that's been challenging is political, economic, and social, right? But just take a look at some of the most famous sort of like economic impacts the region has had that has driven cryptocurrency adoption. The tequila crisis in Mexico. In a few hours, the Mexican peso massively devalued. The most famous probably case here is El Corralito in Argentina, when people that held US dollar deposits in banks automatically lost those deposits. They were converted to local currency at incredibly unfavorable rates. So people lost hundreds of billions of dollars, and they were unable to go and take their money out of the banks. And the Venezuela crisis, which perhaps is the most recent one, where buying today a pack of margarine in Caracas, you have to take almost 2 pounds of paper bills to be able to pay that. With inflation rates, depends, in the 300% or more. And that's low, right? So cryptocurrencies have become the alternative financial world and financial services products for hundreds of millions of people in Latin America. And it's because many of them have lived through these crises, or their parents or their grandparents, and to an extent they were a bit scarred with them, right? And what have these events had, and certainly the inflation rates over the last 2 or 3 years in pretty much all of the world, have also driven people to want to hold different types of cryptocurrencies. But what these events of the past have taught us from a Latin American consumer point of view is, one, there continues to be some level of distrust in the system, particularly in how effective the system is and how efficiently it moves. And by the system, I mean the financial system and sometimes the political system. Two, it's still very limited competition. In many of the markets, it's an oligopoly. 3, 4, 5 institutions control the entire financial services sector. But you're seeing more and more fintech companies come on board. But there's still limited competition that helps solve some of these massive gap problems in Latin America. And then the big difference in Latin America, which you don't see that much in developed markets, is in developed markets, people invest in cryptocurrencies. In underdeveloped markets like Latin America, people divest from their local currency and invest in cryptocurrency. But it's really a divesting play. But perhaps the most profound and impactful thing that all of these factors impact is it drives financial exclusion. So there's still hundreds of millions of Latin Americans that are on the sidelines, unable to access the most basic of things, from being able to receive a cross-border remittance at a much lower cost, to being able to pay for an online purchase without having a credit card, to be able to send someone a P2P payment, and the use cases go on and on. And the result is, if we want the region to continue growing, strengthening its social, economic, and political foundations, you need to have more and more people included in the financial system. And what we've identified is really there's 3 main reasons people across Latin America buy cryptocurrency. One is to protect and store value in markets that are dealing with hyperinflation. People don't want to get paid $100 and 3 weeks later that is worth $30. So people are using crypto as an inflation hedge or to store value. In Brazil, we see it a lot as an investment, people wanting to have part of their investments in crypto. And then in some other markets, it's very heavily used for payments, for sending and receiving payments, both domestically and cross-border. And as I said, 3 of our largest clients at Paxos, which happen to be based here in Brazil, PicPay, Nubank, and Mercado Libre, a few years back, they decided to work and partner with Paxos. And today, we help these customers offer their customers the ability to buy, hold, and sell cryptocurrencies and transfer cryptocurrencies and so forth. But the most important part of our work and our partnership with these companies and the many others we work with is that they have begun to take the first step into what we call the unified digital wallet future, which is today, by offering a crypto wallet that enables your customers to buy, hold, and sell, you're essentially laying the groundwork and building the platform for everything that Paxos and its partners will offer in the future, which is investing, which is sending and receiving payments, which is lending, borrow, and earn on cryptocurrency assets, which is being able to spend and connecting your crypto wallet to basically any merchant that accepts crypto or to new merchant ecosystems, and obviously Web3 and NFTs. And that's why we call this essentially the wallet that helps you access the world over time. It's not about buying and selling crypto. It's about being able to access everything that's coming. So that's a little bit about Paxos. That's what we do. I'm joined today by Juliana Felipe, who is back there, who is based in Brazil and is our person stationed here in Sao Paulo, and Paola Vega, who runs some of our most important partnerships as well in the region. If anyone would like to talk, we're here, but you can also send us an email at growth@paxos.com, and we're happy to have conversations. So thank you so much, and I hope you enjoyed the English lesson. Bye-bye.